big wireless bill. Plans start at just $20 a month, and that's not a short-term promo. But don't just take our word for it. Here's Jackie and Veronica, real customers.
I didn't know that I could get something for a lot less money that was actually better than who I was with before.
Anytime anybody complains about their cell phone bill, we say, you've got to check out Consumer Cellular.
Our US-based experts will get you switched and saving in about 20 minutes. Just call or click to see how much you can save today. Because when it comes to big wireless, if you're staying, you may be overpaying. Call 1-888-FREEDOM or visit consumercellular.com. That's 1-888-FREEDOM or consumercellular.com today. Real people pay to share their opinions in this ad. Plans include $5 credit for auto pay and e-billing.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Pretty big day here on the Financial Exchange. It's Chuck, Tucker, and Paul with you. I don't know why I put Tucker in front of Paul. I think I was just looking at him, but sorry, Paul. Didn't mean to do that. My apologies. In any case, big day today. At 7 a.m., the Mortgage Bankers Association announced the average 30-year fixed-rate mortgage for last week, and it came in at 6.72%. So this is obviously our top story of the day.
I was like, what is he going with this?
No, really, we've got a Fed meeting happening at 2 p.m. today, and so all eyes are going to be on the Fed. And quite honestly, all eyes on the Fed for the first time probably in about, I got to say, at least 4 months or so. The last time I think people were this focused on the Fed was probably the November meeting, just because it came after September where you had that half a percent cut in interest rates. The question was, are they going to go 0.5% or a quarter? They basically went quarter the rest of the way out during the November and December meetings. And so, the December one was kind of a foregone conclusion. And then January was happening. I don't remember the exact date of the January meeting, but it was right around the inauguration. So, quite honestly, no one was really paying attention to the January Fed meeting. And this one, I think people are interested just to see not anything in terms of a policy shift, because quite honestly, what you're going to hear from Jay Powell during his press conference over and over is we still have significant uncertainty about the direction of policy with the new administration. We're going to wait for more clarity before we make any definitive moves. You'll hear 16 different variations of that. But what I am interested to see is the dot plot from the Federal Reserve. And effectively, what the dot plot is, by the way, so this is their summary of economic projections, the SEP as it's referred to. And what that tells you is basically where they think growth, inflation, and the Fed funds rate are going to be over various terms in the future. And the last one that we got on this was on the December 18th meeting. And here's what it showed for 2025, because this is setting the stage for how they view the economy to be evolving. They thought that this year, 2025, change in GDP would be 2.1%. They thought the unemployment rate would rise very, very slightly to 4.3%. They thought PCE inflation would still be running a little bit hot at 2.5%. And core PCE inflation still running a little bit hot at 2.5% as well, with the Fed funds rate falling from about 4.5% down to 4%, call it 3.9 is what they put there. So that's what they thought would be happening this year. Their longer run projections, quite honestly, don't really matter. The only one that is kind of interesting is where they think the long run Fed funds rate is going to be, because from there you can build in the idea of, okay, where do they think like this neutral interest rate is? But even that is just like, counting, how many angels can dance on the head of a pin. The answer is whatever you want it to be ultimately, and no one really knows. So I think that this year, let's look at those big components, because this is where the meat of this Fed meeting is going to be. Do we think the Fed is going to say that the change in real GDP is going to likely be greater or less than 2.1% this year? I'm going to take the under in terms of where they guide.
I would agree.
I don't know how much. Maybe it comes in at 1.9. Maybe it comes in at 2.18. They're not going to be like, hey, GDP growth is going to zero.
Negative 2.4. That's the GDP now.
They don't just look at the Atlanta Fed and say, well, it's going to be that. No, they're a little bit more measured in this stuff. So I would take the under on that. Likewise, if you think GDP growth is going to come in under, would it also follow that they probably think the unemployment rate is going to go up?
Yes.
Higher? Now, again, higher doesn't mean 5 or 6%. I'm not because if they start saying, look, the unemployment rate's going to be, 5%, then they better have a projected Fed funds rate of 0. Because it's basically saying, hey, there's going to be a recession coming, and I don't think they're going to say that. So maybe they think the unemployment rate by year end is 4.4, 4.5, something like that. PCE inflation, given all of the different models of tariff impacts and this and that, it's hard to imagine that they're going to come in and say anything other than, hey, PCE inflation is going to be, again, probably hotter. Maybe it's 2.6, 2.7, 2.8. They're not going to say PCE inflation is going to be 4. Right. I don't think they're going there. But, yeah, most of the stuff that I've seen is that the estimates from the tariffs currently imposed probably add somewhere around 0.2 to 0.4% to annual inflation. And given that those tariffs are now imposed, you'd say, okay, the Fed might say, yeah, PCE inflation is going to come in at 2.7 this year instead of 2.5. Core PCE maybe doesn't move as much. Maybe it goes from 2.5 to 2.6 or something like that. I mean, that's kind of the magnitude of changes that I expect to see. But overall, I think the expectation on this, and maybe I'm off base, but I don't know. I seem to think I have a decent handle on how the Fed's going to view these things. They're going to expect that because of things like tariffs, there's going to be some slower growth in the U.S. and higher inflation. Is that a fair read on what we should expect to see from them?
Yeah, I'm trying not to get clouded by, because every piece you read now is hidden all of those check marks, and
sure.
Then so much, and we've talked about this in the show before, there's so much sentiment out there that's negative, and if we play that against what type of hard data that we have in place that would back the negative sentiment, it almost clouds my judgment a little bit, where you're just so absorbed in reading all these pieces about poor sentiment that you almost think as if we're there and we've seen significant deterioration of the economy, and we're not in terms of a hard data perspective. But that is really what the importance of this meeting comes down to for me today, is not anything with policy on the rates. We know that those are going to stay unchanged, and it's likely that they'd probably stay unchanged, at least for the moment, through the next meeting at the beginning of May, at least looking at some of the CME futures. It really is, this is time where so much of the Fed speak is just, rightfully so, I'm not criticizing this for this at all, but it's just cliches and, hey, we'll wait and see. We got to see what the data comes back in. But this, to your point, they have to put numbers where, they got to put their money where their mouth is, to a sense, just by putting out this dot plot. So that's why there will be interesting data pieces to parse from this. But I would envision that they trend in the direction that you just mentioned, cutting down economic growth, boosting up unemployment estimates a little bit, and adjusting inflation. And that's all playing off of the tariffs that we've seen discussed, but no one really knows how long are they going to be in place for, what type of impact that they'll have from a pricing perspective. So that's what makes this so challenging to parse out.
Yeah, so I think that, again, some modest shifts in how they're projecting things, like they're not going to be... It's not going to be that whole sky is falling, thing that the last couple of weeks where, people were asking like, hey, are we already in recession and stuff like this? Like we've said on the show multiple times, let's pump the brakes. I mean, it's pretty far to get from where we are to recession. It can still happen quickly, but it's not something that's even in the conversation right now, given the data we've been getting. And so again, maybe the Fed says, yeah, GDP growth is going to be 1.9 this year instead of 2.1. Unemployment, we thought it would be 4.3. Maybe it's going to be 4.4, 4.5. PC inflation, yeah, it's going to come in the high 2s instead of in the mid 2s. That's kind of the magnitude that I think they're comfortable projecting right now.
Yeah, because why would you have no incentive to be more aggressive with it?
Why
really?
would you?
Yeah.
Why would
send
you?
that messaging when you and I don't know and they don't really know how this is going to trend? So why would you be overly, emotional, not emotional, but why would you be overly pessimistic about some of the projections? Make some tweaks, but like you said, don't go crazy with it.
So that's, again, going to be the big thing that we're watching this afternoon. The Fed meeting is going to they're going to release the interest rate decision at 2 p.m. and then Powell is going to be on from 2:30 onwards. So I know where I'll be at 2:30, watching Jay Powell. Anyone have any guesses as to tie color for Jay? You sticking with purple?
I don't watch that. Is it? I know you've said it's always purple. It never changes.
It's always
never
purple.
deviates.
Jay,
maybe a little St. Patty's Day carryover.
They say purple is the color of royalty, and I think Jay is as close as we have to American royalty. Am I wrong?
No tie?
I am wrong.
You could be wrong.
I am wrong.
No tie? Cash Powell?
I like that.
Okay.
Couple buttons undone. Old chest hair popping on.
If Powell wears...
Laid back Powell?
Here's what I'll say to this, Tucker. If Powell wears no tie today, I will eat a tie tomorrow.
All right.
You heard it here first.
Okay. If Powell wears a purple tie...
If any of our listeners have any connection to Jay Powell, please phone him.
Yeah. Get mustard on his tie
Tuck,
so he doesn't have to wear one.
Can you text the Manouche and see if he's got a line to Powell?
Sure, yeah.
Yeah, see, let's see what goes on there. Let's take a quick break here. When we come back, oh good, we get to talk about the debt ceiling right after this.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. And if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
All right, so let's talk about this piece here from the Wall Street Journal. As debt ceiling looms, the Fed considers tweaking its portfolio runoff. So, a couple things. Yes, that is correct. We are, getting back to having to discuss the debt ceiling because I don't know if they've specified like the X date as to when they exactly expect to see this pop up, but I believe it's sometime this spring. I don't have the exact detail. I was poking around for it this morning and couldn't find anything meaningful on it. But here's the thing. The Fed, one of the things that they have been doing is reducing the size of their balance sheet. And effectively, what this means is that during times of crisis, the Fed has bought up a whole bunch of different bonds, predominantly U.S. Treasuries, but also some mortgage-backed securities and things like that, to the point where in the middle of 2022, it peaked at around $8.9 trillion of bonds that the Fed held on its balance sheet. It's now down to around $6.7 trillion worth of bonds that it holds on its balance sheet. And they've been running them off at a pace of, I think it's like $120 billion a month, somewhere in that range. And so the question is going to be, hey, what are you going to do with that? Because, there are some signs that are pointing to, hey, you've kind of, gotten to the point where most excess reserves are probably exhausted from the system, and you don't necessarily need to, be continuing to reduce the size of your balance sheet. And so effectively, the question is, okay, when do they, make a change here? And the thought is pretty soon, and this comes back to something that happened at the end of 2019 into end of 2018 into early 2019, where Jay Powell famously at the end of 2018, the Fed was in balance sheet runoff mode there as well, and said, yeah, the balance sheet is, on autopilot. And about, I don't know, within like 6 weeks, he had to pivot and be like, yeah, we're actually going to halt balance sheet runoff because we started, experiencing some dodginess in the financial system. And the Fed never hiked interest rates again in that part of the cycle, and that was basically it. So I think that Powell, having gone through that, I think he was somewhat spooked by it, and I think this is something that informs his view on how he conducts monetary policy generally. And so as such, I think they're probably going to take the approach of, hey, even though we could run the balance sheet off further, there's no real need to do so. And as such, maybe we can avoid, some volatility associated with bank reserves getting too low and call it a day here.
Yeah, it seems like they just don't want any interference with that debt limit conversation and the runoff of the balance sheet. It can cause overnight lending issues in the market if you do drain those money reserves from the banking system too quickly. And, that seems to be really the whole hold up the issue. You summarized it pretty well, like you kind of alluded to before the break on the debt ceiling front. There's only so much that can really be covered, but it seems like they should be able to navigate this reasonably well by perhaps pausing some of the bond runoff for the time being.
Yeah, and the debt ceiling stuff, it's not something like, it's not going to be an urgent thing that we're discussing. Quite honestly, we should never discuss it because it shouldn't exist, but that's neither here nor there. This is something that is going to be coming up probably June, July, August. Like it'll be a fun summer thing that we get to do alongside of barbecues.
I thought I read August, as to when it might come up.
Yeah, burgers and debt ceiling. It's a great way to spend a summer if you're asking me. New York Times piece: does the Fed share the stock market's worry about the economy? Well, let's define what the stock market's worry about the economy is before we talk about whether the Fed shares it or not. The S&P 500 is still trading like 19.9 times forward earnings, which to me implies, hey, we're not as exuberant as we were before, but we're still pretty exuberant. And so our worry at this point, our being the markets, can best be described as, hey, there are things that give us pause as to whether or not stocks should have some of the highest valuations we've ever seen.
Yeah, we've seen a 8.6% sell-off from the record high that we reached. We're down about 4% year-to-date on the S&P 500. So we've covered, certainly has been a sell-off over the course of the last month or so. I think it's important to keep those numbers in context, that it is 4% year to date that we are down, and this comes off the heels of really good market years in 24 and 23. In terms of the Fed, obviously the stock market is not something that is part of their core responsibilities.
No.
What they do can influence the stock market. We've seen that over the course of the last couple of years, but really what this comes down to is the Fed and their dot plot, which we alluded to in the first segment of the show. What are they going to see from a long-term perspective, shorter-term perspective for the economy and things like that? There certainly has been a lot of sentiment that's been negative. We've talked about there's been some retailers and airlines that have come out saying that consumption and sales have been weaker. So all of this factors into the issues that the Fed will try and sort out with its projections this afternoon.
And here's a couple things. First, I don't think the Fed's likely to overreact, just because generally if there's one thing you can say about the Fed, they typically underreact to most things. The times when they do overreact, I think, get a little bit embarrassing for them. But when inflation was, ratcheting up, did the Fed overreact to inflation?
Underreacted there. I would say you could say they overreacted to the amount of stimulus that was needed to be, that was,
but the Fed didn't pump the stimulus.
Right.
That was Congress doing that.
Yeah.
And then, did they overreact?
Well, the bond buying, the quantitative easing, going for too long.
Did the Fed overreact when Silicon Valley Bank blew up?
No.
They weren't like, oh, gee, this means recession, let's cut rates. Like, they did nothing. And so I think most of the time with the Fed, the right answer is do less. And I think they're actually kind of good at that. And recently, the last 18 months, I think they've done a nice job of doing less. I think they've been good at doing less, which is good to see. I think that the other piece is, for all of the chatter out there about, how worried people are and this and that. I don't think the stock market's overreacted either.
No.
You know, like a 10% pullback is something that we see on a pretty regular basis. If the market had sold off like 25% in the last 3 weeks, then you'd be like, okay, like this is, you know, even if, you know, recession is definitely coming, which I'm not saying it is, like this is probably too far given the totality of what we've seen. Like an 8 to 10% pullback based on some questions.
It felt a little more healthy, you know, based on a market that was heavy in speculation and pretty overvalued.
Yeah. Let's take a quick break here. When we come back, we're joined by Todd Lutsky for Ask Todd. We've also got Wall Street Watch coming up as well.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. You know, typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can can a financial advisor do for me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
With all eyes on the Fed, markets today are well into positive territory ahead of the conclusion of the central bank's meeting at 2 o'clock this afternoon, where rates are expected to remain steady. Wall Street will be paying close attention to Fed Chairman Jerome Powell's press conference soon after at 2:30 for any noteworthy remarks about the economy. At the moment, the Dow up by 0.2% or 259 points. S&P 500 also up over 0.2% or 38 points. And the Nasdaq is up nearly 1% higher or 160 points. Russell 2000 is up by about 0.7% or 14 points. 10-year Treasury yield up by 2 basis points at 4.30%, and crude oil edging higher, trading just below $67 a barrel. General Mills reported earnings ahead of the open this morning, where its fiscal third quarter results were below internal expectations. The maker of Cheerios and Bisquick also lowered its full-year guidance amid consumers spending less on snacks. General Mills shares are down about 2%. Meanwhile, Tesla shares up over 2.5% after the EV maker received approval from the California Public Utilities Commission for a passenger transportation permit, making it one step closer toward offering ride-hailing services. Elsewhere, Nvidia shares are up over 1% after the chip maker's CEO Jensen Huang said at its flagship conferences that continued advances in AI would require at least 100 times the computing needs believed even a year ago. And health equity shares sinking by over 20% after the health-focused fintech company reported weaker than expected fourth quarter earnings. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
As promised, we are now joined by the one and only Todd Lutsky for Ask Todd. It's your chance to ask Todd your questions about your estate plan. And we got the phone lines wide open for you to give him a call. 888-205-2263. That is the number to call to ask Todd your estate planning questions live on air right now. Usually get through 2, maybe 3 calls, so get calling early and often in order to make sure your call is taken here. Again, 888-205-2263 is the number. One more time, it is 888-205-2263. Mr. Lutsky, how are you doing today?
I am never better. How are you?
Good. Trying to plan some summer trips and stuff like that.
Oh, yeah?
Wife and I are considering a trip to Mount Everest.
Oh, I hear that's nice.
She wants to color her hair at the top of it.
Yeah?
She's willing to die on that hill. Todd, I want to talk a little bit about life estates.
Okay.
Let's say that I am someone who has reserved a life estate in a property.
Okay.
And I end up going into a nursing home.
All right.
Not
just a property, on your home.
My home.
Right.
On my home.
Got it. Go ahead.
What happens to my home in that case as far as liens against it, equity needing to be used? How do things work from that perspective?
So, as we've said before, there are two ways to sort of do a life estate. A right way and a wrong way is what I like to say, but I should say one is less bad and one is bad. So the way to do it is, in your example, we're taking the house and we're putting it in the hands of the children, and we're reserving the right to live there, which is one way to do a life estate.
Sure.
So there are benefits. I don't want to make it sound like there's no benefits to doing a life estate. There certainly is and are benefits, one of which is what you said. Let's say you put this arrangement together and you make it that 5 years. Remember that's that waiting period that you really, there's only a very few ways to ever avoid that. But so for the most part, you're going to have to wait 5 years in order for it to be protected from the nursing home. But if you set it up and get beyond that waiting period, and in your example, then need to go to a long-term care facility, the house will be protected 100% from the nursing home.
What about on the other side of that transaction? What happens if I've transferred the property to my kids, and let's say that one of them runs into some kind of legal situation where they have a creditor who's looking for money from them, or let's say that, they need liquidity because something went wrong in their business and they need to sell that property. How do things work if they run into financial trouble?
Yeah, I think it's a great question because you got to look at a life estate from all angles, right? From all sides of this equation. And the kids' side of this equation is where some of the problems come in. Well, we just discussed a benefit. I think some of the problems would be, it is going to technically be exposed to that kid's creditors right away. Why? Because they do own it. You made a completed gift of a future interest. Now, good news for the life tenant. The life tenant, they can't move against the life tenant. So they will have that confirmed right to live there. They won't lose the house to that creditor. However, that child will have to deal with that creditor. Let's say, for an example, it's a divorce. If it's a divorce, at that moment, that child going through the divorce might have to say to the soon-to-be ex-spouse, okay, I'll tell you what, here's the value of the home. I'm going to keep the home to protect my mom, and I'm going to pay you, the value, your half of the value of that home.
Sure.
So just allocate assets. So to me, it's still a problem for the creditor. So I don't love it for that reason.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you've got a question to ask Todd, this is your opportunity live on air right now. Still room on the phone lines at 888-205-2263. That is the number to call to ask Todd your questions. Again, 888-205-2263. We're going to take a quick break here, but when we come back, it is right to your questions with Todd. That number one more time is 888-205-2263.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Todd Lutsky answers your questions about estate and elder life planning every Wednesday at 10:30, right here on the Financial Exchange Radio Network.
All right, let's get to your calls with Todd Lutsky. First up, we've got Jimmy in Provincetown. Jimmy, what is your question for Todd?
Hi, Todd. How you doing?
Never
I have
better.
a question in regards to when we sell the property in the trust.
Yeah.
The taxation issue on the capital gains. Would the trust pay it, or would the beneficiaries pay it after the assets are distributed?
So Jimmy, remind me, just because there's lots of Jimmys. Are you? Is this my trust that we did, or is it another person's irrevocable trust?
Well, we did one for my mother, and then when she passed away, we did a similar one for me and my brothers and sisters. So I'm the trustee, and my brothers and sisters are the beneficiaries.
And so, okay, so what you're saying is you're my client.
Yeah.
Okay,
yeah.
I just need to know that so that I can, because then I know it's my trust. If it was someone else's trust that I didn't draft, it would be harder for me to answer the question. So now that I can tell you that it's our trust, and so your portion of the property, you said your brothers and sisters inherited this property?
We all did.
So
we all in different percentages.
Yeah, what percent do you own?
I have a 40% interest.
And your 40% interest we put into an irrevocable trust for you, correct?
I don't think so. I think it was just I don't know if it was irrevocable or not.
Oh, so
I didn't really do a complete trust like that.
Oh, so again, Jim, in order for me to answer the question, I kind of need to know what kind of trust we did for you. Just hard for me to remember right, off the top of my head. So I'm going to give you two answers. If we did an estate plan together, I can assure you that I would have transferred your interest in the property into a trust. Okay? And the ownership, only your interest though, not the other siblings. I would have transferred your interest into a trust. That trust would have been either revocable or irrevocable, depending on what your wishes were. So when we met, was one of your wishes to protect assets from the nursing home in case you got sick in the future?
I don't think we did a trust for me.
Oh, so then we're probably not a client then. In other words, other than I did it for your mom, right?
You did it for my mom, yeah.
Okay, so your mom passed and you got 40% interest.
Yeah.
So I'm trying to understand your question. So now you're selling that property?
Yes.
Okay, so I'm sorry, what'd you say?
We're in the process of selling the property here on the Cape.
Right, so you and your siblings are selling the property.
Yep.
And you and your siblings are signing any purchase and sale agreement in your own name, correct?
Yes.
Okay, so there's no trust involved here at all, because I thought in the beginning you said you were selling it from a trust, and I might have misheard that. So you're actually just selling it from your own name, correct?
Yes.
Okay, so the answer is on the date of your mom's passing, that property was fully included in her estate for estate tax purposes. So, like, when did she pass?
She passed in 2016, March 15th, 2016.
So of 2024, 2025.
No, she passed in 2016.
Oh, in 2016. Okay, so if she passed in 2016. Now, that was, quite a while ago, so I'm sure there's been some appreciation. But the basis, the cost basis for you and your siblings will be whatever the value of that property was on the date of her death in 2016. So you got to go back and get a backdated appraisal for that, find out what it was worth then. That's your basis. Then whatever it has grown to from that day, the difference between what you sell it for today and what it was worth in 2016, plus any capital improvements you might have made or your siblings have made to the property since 2016, is your basis. So date of death value plus improvements is basis, minus what you sell it for today, capital gain. And if you don't live there as your primary residence, you're not going to get any capital gains exclusion. It'll just be the capital gains tax associated with that. So, good news in the sense that at least you got as much of a basis step up as you possibly could have by doing the planning, or that your mother did the planning. It's just now a function of paying the gain on the future growth. So hope that helps, and good luck with the sale. So, folks, that's a great question, because capital gains come up all the time when we talk about life estates. And so if you've got a life estate and you're wondering if you go to sell it, what the tax ramifications are, really need to get the guide, right? Because this is one of those things where you're going to find out that there are sometimes negative capital gains tax consequences associated with selling a home in a life estate arrangement, especially when the remaindermen are the children. This guide not only talks about those issues, it talks about the two ways to create a life estate and other gift tax, income tax, estate tax, creditor issues associated with loss of control. Another question associated with these life estates. So if you got one or you're thinking about doing one, call and get the guide and learn what you're getting into. 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, before the break, we were talking about potential downsides to kind of what you might see in a life estate if things go wrong. We covered a couple examples there. What other potential issues are there with the use of life estates in an estate plan as kind of like a core piece of one?
Yeah, and I think maybe it's a great follow-up question really to Jimmy, who just called, because I think we probably should spend some time, since he's selling a piece of property, and I can kind of compare what he did or what his mom did and what we did for them versus a life estate situation. So he's selling piece of property after mom passes, so that's a little different. Full step up, no problem in the gain world, except for the future growth. But if you're living, right, people set this stuff up and they could be 65. 5 years later, they want to say, now I'm 70 and I want to move to Florida. Oh, well, I want to sell my house.
Sure.
They should be allowed to do that. But if you gave the house to the kids and reserved a life estate, here are some steps that you have to go through in order to sell it. First, you have to ask the kids. Okay, well, I don't want to have to do that. That's problem number one. Number two, let's assume that they're nice kids and they say, yeah, we're going to sell it. Now both people have to sign, the children and the life tenant. Then we have to go to an IRS table based on the life tenant's age in the month in which the life tenant is selling, find the applicable federal interest rate in effect so that we can determine what percentage value of the proceeds from the sale get allocated to the life tenant and what percentage proceeds from the sale get allocated to the children. I can assure you, the older you get, the smaller the percentage proceeds of the sale will be to the life tenant. So if you're 75 when you're selling this, you might only get 20, 25% of the money. So if you sell the house and you only get 20, 25% of the money, I suspect you don't have enough money to buy your new house in Florida. So now you need to ask the children to give you back money that they got. Well, that's not a good place to be. In addition, what about the income tax? Oh, forget that for a minute. The kids might have a gift tax when they give back the money to mom and dad if they give it back. So that's a problem. But more importantly, what's the capital gains tax? Well, the life tenant would get to a capital gains exclusion, $250 if you're married, or I'm sorry, if you're single, $500,000 if you're married. But the children don't. If they don't live there, they don't get a remainder interest, or they don't get a capital gains exclusion. They're going to have to pay higher capital gains tax than you would if we got the whole capital gains exclusion for mom and dad. Folks, that's just one example of a life estate issue.
Mr. Lutsky, thank you so much for joining us today.
Always a pleasure.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing & Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing & Armstrong do not endorse each other and are not affiliated.
Still more to get to as we head towards hour 2 of the show, including what we've been seeing so far this year in terms of the divergence between U.S. and international stocks and how they have been performing. Also, Nvidia with a big, not convention, but I guess a big conference they had the other day. I think it was yesterday, actually. We'll tell you what CEO Jensen Huang was saying and exactly, where they think the future of AI is going. And then we'll talk about why Taco Bell and Nvidia can somehow be said in the same sentence, unironically. All that and more coming up in a bit.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Hour 2 on the Financial Exchange. Chuck, Paul, Tucker with you, and we got markets having a cautious rally today. Thus far, the Dow is up 234 points. About 0.5%. The S&P up 31 points, also about 0.5%. The NASDAQ is up about 130 points, about 0.75%. So a nice little relief rally day. But remember, these indices were all down more than this yesterday. The S&P down about double. Can't remember on the NASDAQ or Dow exactly how much they fell, but it was worse. The 10-year U.S. Treasury not really moving much before the Fed meeting this afternoon. U.S. 10-year Treasury at 4.302%. That's up 2.1 basis points right now. The national fixed-rate mortgage for 30 years, according to Mortgage News Daily, still sits at 6.78%. So we've been just hanging around that 6.75% range for the last couple of weeks now after being up in the low 7s earlier this year. Other things that are moving. West Texas Intermediate for oil is at 67.04, up 14 cents a barrel. AAA National Average for gas prices up. Oh, gee, big jump, actually. I saw this. There are some refinery switches that are going on right now, and so gas prices up 2.4 cents a gallon overnight to 3.10 and 0.2 cents. New England actually still kind of ahead of the curve on this, but the expectations are that New England's going to start seeing some upward pricing pressure in the next several weeks. This just due to the switchover from the winter blends of gasoline to the summer blends. Finally, we've got gold today, down $4.30 an ounce to $3,036.50. And so overall, nothing moving too much in advance of, well, the Fed meeting this afternoon. Let's talk a little bit about one of the big trends that we've seen in equity markets so far this year. And specifically what that is that, the best way to put it is that international markets are doing a lot better than U.S. markets generally. So here's what we've seen. And this is through the close yesterday that I have here. And I'm just going to quote level changes, not total return, because I'm not factoring in dividends because they can be taxed all kinds of differently depending on where you are in the world. The S&P 500, year to date, as of yesterday, was down 4.54%. The MSCI Emerging Markets Index is up 6.48%. The MSCI EFA Index, Europe, Asia, Far East, up 11.06%. MSCI Japan up 4.47, MSCI Europe up 15.3. Basically, where I'm going on this is that unlike the last 15 years or so, where U.S. markets and specifically the S&P 500 have just absolutely dominated their overseas counterparts, the opposite is absolutely happening this year, and it is something that I think has caught a lot of investors kind of off guard because they weren't prepared for it. And so what you are seeing here is kind of a reassessment of where capital needs to flow, not just based on what's going on in markets here, but also talking about, hey, what fiscal plans are we seeing from Germany and potentially the rest of the EU? How is trade going to be impacted? How's that going to impact how capital flows back and forth? There's a lot going on here, and it's something where I know that, again, no one knows where any of this is going to go, but remember, we've had basically almost 15 years of U.S. outperformance compared to international. It would be surprising to me if all of a sudden we sit here and we're like, well, that corrected itself in 3 months. I guess we can call it a day and go back to the S&P trouncing it. That may very well happen, but I think that we have to see how this plays out because there's a lot that potentially is changing when it comes to global trade, capital flows, and things like that over the course of this year and into the future.
It's a really interesting idea to cover. Like you mentioned, the S&P 500 has just crushed international markets for the longest time here, and you've had a couple different factors that have led to the resurgence of whether it be the European markets or the Asian markets. You know, part of that was the...
Can I just give some scale like as to the magnitude of what we've seen on this? So let's go back to the start of the 2010s. So let's go back to 1/1/2010, just as an example. The S&P 500 during that time is up 405.8%. The MSCI Emerging Markets Index is up 15.74. The MSCI EFA is up 58.91. The MSCI Japan's up 86.52. MSCI Europe is up 60.14. So just to give you a sense of the scale here, we're not talking like the U.S., the S&P outperformed these other indices by 20, 30, or 40% over that time. I mean, in the case of emerging markets returned like 1% a year. Again, this is level change. It's not factoring in dividends, so, take that for what it's worth. But in terms of, stock, like capital appreciation, MSCI Emerging Market Index basically returned 1% a year for the last 15 years. And the S&P 500 returned 15-16% over that time. So, it's just huge scale that we're talking about in terms of how things have gone.
And part of the correction is valuations returning back. We've talked about before that whether you're looking at forward PE, price to sales, any type of valuation metric for the S&P 500, we were at levels that we haven't seen since the late 90s. So some of this sell-off could be due to just that. There was a significant amount of market euphoria really after November and the end of 2024. And then you've also had some geopolitical events occur. Obviously the tariffs, which we've spoken about quite a bit, but other countries taking different policy stances. Germany, we talked about a little bit on yesterday's show, the expansion of their fiscal policy, a country that had typically been very conservative from a debt standpoint, saying that they're going to be a little bit more accommodative in raising more debt. You've also had interactions between Brazil and China to kind of increase trade activity between those two countries, and just sort of global economic policy outside of the U.S. loosening it up a little bit compared to a U.S. policy that has been tightening over the course of the last couple of years or so. And then you also have had some events out of China, the DeepSeek event that occurred in late January, and then BYD yesterday coming out with allegedly a electric vehicle battery that could charge in 5 minutes, causing a lot of these shakeups that we've seen here. So it's been interesting to follow.
It has, and again, I don't think any of us know exactly how this is going to play out in the long run. Like if you had polled investors back at the start of 2010 and just asked them, hey, over the next 15 years, what do you think the average rate of return for U.S. and international stocks is going to be over that time? And you like put it into like your traditional like three big buckets, like U.S., international, developed, and emerging markets. Here's what most people probably would have come back with then, and this is just from, again, how, like, what you see with, like, big institutional investment consultants. They would have said, okay, U.S. stocks are going to return 9% a year. International stocks, developed, are going to return 8.5% a year. Emerging markets are going to return 10% a year, and they would have called it a day. And it's not to say that like all institutional investment consultants are dumb and they should have seen it coming. It's more like you don't know how small changes potentially evolve into, big investment differences over a 15-year period. And so, to look at this right now and try to have any, predictive value as to, well, this is what we're seeing like the first few months of this year and this is what it means like for the long term. We have no idea, but what I can tell you is that if you look at the period before what I just referenced, so I was talking about 2010 through 2024. Let's now go look at the 15-year period before. I don't know what I'm going to find, by the way, here, so like we're going to do this live. Here's what we see. If we go from 1/1 of 95 through 12/31 of 2009, here are the returns for the same indices that I just gave you. The S&P 500 during that time returned 142.8%. The MSCI Emerging Markets Index was 100.9. The MSCI EFA was 52.31. MSCI Japan was 34.23. And MSCI Europe was 133.7 in terms of percentage. So overall, U.S. stocks still, carried the day for that 15-year period, but by a much smaller amount compared to Europe and EM. And especially, again, EM was the second best performing, category, second best performing index here, whereas it was the worst in the other one. Just because something does well, even for 15 years, doesn't mean anything about where it's going to go the next 15. So I don't know what any of what we're seeing, like if what we're seeing today means anything, because we're going through a period where there are some potentially pretty dramatic shakeups of world trade and capital flows on the horizon. We've never lived through this. We've never lived through potentially something of this scale moving this quickly through the world financial system and the world trade system. Anyone who says like they know how this is going to play out, I think is lying to themselves. I don't know. I don't know who it's going to be good for. I don't know who it's going to be bad for. I have no clue. We're talking about things that have not been in mainstream consciousness for 80 years.
Yeah, and I'm just not willing to print this whole story that because of the tariff situation, it's just so tenuous. It's hard to make sweeping projections. It's hard always, but even more challenging when the crux of the concerns with the U.S. market are tied to tariffs, which are so constantly evolving.
Would it surprise you if the average U.S. tariff rate at the end of this year is 25%?
No.
Would it surprise you if the average U.S. tariff rate at the end of this year is 0?
No. That's
like,
it.
I have no idea.
Right.
This could all end up being resolved in a bunch of negotiation, and there are no tariffs that are imposed by the end of this year.
Exactly. That's where I come at it. Is just open on each side to either outcome.
Let's take a quick break here. When we come back, we'll do a little bit of trivia, and then we'll talk about what retail investors have been doing recently, right after this.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bench you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Let's do a little bit of trivia here on the Financial Exchange. And believe it or not, today is Bruce Willis's 70th birthday. Before retiring from acting, Willis was one of Hollywood's most bankable stars. Movies with Willis as the lead actor have generated over $5 billion at the box office. Trivia question today: what is the highest grossing film of Bruce Willis's career? Once again, what is the highest grossing film of Bruce Willis's career? Be the sixth person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the sixth correct response to text us at 617-362-1385 will be our winner. See complete contest rules at financialexchangeshow.com.
Piece in CNBC: retail investors ditch buy the dip mentality during market correction. I'll quote here: retail outflows from U.S. equities rose to about $4 billion over the past 2 weeks as tariff chaos and mounting economic concerns caused a 3-week pullback in the S&P 500. This according to data from Barclays. I don't really know what to make of this because I've seen some conflicting reports about how money move. I don't know what you can actually believe as far as retail's doing this or retail's doing that, because I've seen data that is, again, just kind of all different on this. I also don't know why. I know why you would, in theory, try to figure out what retail is or isn't doing, because historically, aside from a very brief period in 2021, retail generally is kind of referred to as the dumb money. It's not my term. It's just, how it's referred to in the biz. That also implies the existence of smart money, which, as we've discussed, doesn't really exist either. Everyone's like, oh, the smart money is the bonds. Well, yeah, why'd all bond traders get smoked the last few years, in terms of how things were moving? And, well, the bond market knows what's going on. No, it doesn't. It didn't think that rates were going up as much as they were back in, 2022. So I never quite know what to do with pieces like this. I generally try just to not read them. But I appreciate Tucker putting it in our stack so that we can talk about it, because, again, people will see this and be like, oh, retail traders weren't I don't know what to do with something like this.
The retail flows, hard to track, but what we can likely agree on is that the speculative sort of flavor of the market has subsided quite a bit year to date. It doesn't seem like there's the same market euphoria that there was, over the course of the last couple months in late last year.
Seems like it.
Yeah.
Seems like it. I find something much more interesting here in this piece. Meta becomes final Magnificent Seven stock to turn negative in 2025. So here's what you're seeing year to date for Mag 7 companies. Microsoft off about 8%, Nvidia down about 12%, Apple down about 13%, Amazon down 11%, Tesla down 42%, Google down 13%, and Meta down about 0.5%. But obviously Meta's been holding up better than the other ones. Apple was until recently, and then Apple kind of puked all over itself for the last, week and a half or so. But the interesting thing right now is that for the first time since November of 22, this is the first time that all 7 of the Mag 7 names are underperforming the S&P 500 for the last 3 months.
Wow. I mean, they have just carried the performance so much over the course of the last couple of years that it probably was about time.
Right, it can't continue forever. Yeah, we're not going to become the United States of Microsoft. We'd have to change the initials first and foremost. It's more likely to be the United States of Apple.
I mean, we talked about the weightings that they've had in the S&P 500. I know that was up in and around 30+% or so. I'm not sure with some of Tesla's sell-off and some of these other ones, what it looks like today. Obviously, I'm sure it's down slightly, probably not a tremendous amount, but
sure.
The weighting was just so significant, and the amount of performance that they've added to the S&P 500 over the last couple of years is massive. So it probably was time at some point, but it doesn't look like there's any real near-term catalyst for any of those 7 names for the time being, but we'll see.
Sticking with Mag 7, Nvidia's CEO Jensen Huang said that AI computing needs need to scale up by 100-fold. That's a big number. And this is basically as he's talking about, hey, this is in order to get to the kind of advancements we think are possible, this is how much computing power you need, which then raises the question, how much electrical power do you need and where's that going to all come from? But I guess we can just hand wave that away with, well, maybe we can turn a nuclear power plant back on or something like that. And the interesting thing to me about this is that, and again, what I find interesting about AI is the stuff that we're seeing that's developed now is being built on the chips that were delivered a year ago. So I do have interesting questions about, hey, NVIDIA's new Blackwell chips that have started being delivered in the last couple months, the stuff that's powered by them is not really going to show up for us until later this year, just because, with that kind of increase in computing power, you can't just build on the old architecture. So I do, kind of have this idea in my mind that, yeah, you still could see some pretty incredible transformations here, but I'm also still trying to figure out, to me, it seems like it's more on the corporate side, and that makes it a CapEx issue more than anything else, because I don't see any kind of killer AI app for individuals.
I've found using ChatGPT more on a day-to-day basis that it's helped with things. I'm not telling you it's revolutionized my day-to-day, but starting to understand, how it can just be so much more valuable than Googling something to put out a question to ChatGPT to get a much
search engines suck now.
Yeah, I doubted you before with that, but now you see the difference in the clarity and the thoroughness of the answers versus just trying to push a website link for someone to buy something.
Now, you also do get kind of the weird AI answers that come up from time to time, so you do have to fact check it. But
grain of salt.
Let's be honest, you have to do that with search also.
A lot.
Quick break here. Trivia answers next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically, you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Well, seeing that it's Bruce Willis's 70th birthday, we asked the trivia question, what is the highest grossing film of Bruce Willis's career? That would be The Sixth Sense, which earned $672.8 million worldwide. Winner today of the Financial Exchange Show t-shirt was Joshua from Portland, Maine. Congrats to Josh, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Taco Bell parent Yum Brands partners with Nvidia to speed up its use of AI. So, when we talk about fast food companies trying to do AI, Paul, what the heck are we talking about here? Like, what are they saying they're going to do with this?
So basically what they're working with NVIDIA on is piloting 500 restaurants, a broader rollout of the technology that would basically be used to sort of do a performance assessment of these different food chains, looking at using it for drive-through orders, checking the accuracy of orders, how to schedule different workers effectively and place supply orders. Those would be kind of the items it would try and work through to make the businesses and franchises more efficient. You have skepticism.
I don't know, like what are you gonna get from this?
The order taking, I don't understand how AI could be a factor. That doesn't make sense to me.
I guess I'm just trying to figure out, like, why do you need artificial intelligence to tell you if you're getting your orders right or not? Right. Like, what makes AI able to do that in a way that regular computing doesn't?
Wouldn't you have to manually mark it if you are getting them incorrectly?
Well, how would AI know if you're getting it incorrect without you manually marking it somewhere to begin with? Like,
if it can take, I don't know if it can do this. Take the voice input of the order versus what the printed ticket is.
Okay, I guess.
I'm not behind under the hood.
But you can't do that with like regular voice recognition right now. I guess that my question is, what are we actually branding as AI, and what's just computers being computers?
I don't know the intricacies of what they're exactly going to do, but obviously it's an aim at increased productivity. I get that part.
It just feels like we're getting a little bit buzzwordy with it at this point.
I mean, the ship has sailed on that.
I forget who it was. I think it was one of the other fast food chains was talking about how they were going to use it to help like drive predictive algorithms for what people are going to order, and I'm like,
well, that can already be done.
Well, I'm like,
it already is done.
Guys, if it's hot, they're going to order more McFlurries.
Yeah, I mean, and that's been around. Like that, Starbucks, the big chains have data on that. That's why the mobile apps are so valuable.
But this is the thing, like generative AI. The promise of it is, hey, it can write, it can create, it can do. Not it can analyze data, because we already have computer programs that can analyze data. That's existed for a while. So why do you need Nvidia chips to figure out if you're getting your orders accurate or not? And that's what I struggle with, I guess, is, the promise of this generation of artificial intelligence is it's generative. It helps to like create something and put it out into the world. Why does Taco Bell need that to figure out if their order accuracy is good? And so I'm just kind of struggling there. But I admit to, struggling sometimes, even when being faced with really obvious things. So your mileage may vary. Speaking of mileage, Butch Wilmore and Suni Williams, they're back on Earth. Either of you happen to watch the splashdown of the capsule yesterday?
Did not see it. No.
Yeah, so they're back. I would imagine that probably, I know that, while they're up in space, they have some treadmills and things they can run on and weights to try to, keep themselves, resistance bands, try to keep themselves strong. But I got to imagine after 9 months in space,
it's got to be hard.
Those first steps on Earth gravity are probably not the easiest.
Yeah.
But they're back, and I got to say, pretty cool. And hey, 9 months in space, I'm willing to venture they probably aren't itching to get back up there, anytime soon.
Remind me, how long were they supposed to be up there?
A week.
Oh, man.
A week.
Oh, boy.
Yeah, they went around the Earth 4,576 times and traveled 121 million miles.
What a long, strange journey it's been.
Question, from a tax perspective, does being on the International Space Station count as being out of the country, and how does that affect your filing for 2024 and part of 2025?
Were they paid overtime for all this work, too?
Right. Do you receive overtime? Is it federally taxable? Like, how does it all work?
Maybe they just give you a break. You're like, you know what? Don't have to pay in this year. We screwed you enough.
Is it like Armageddon, where they never have to pay taxes ever again after doing this? Just a question.
If you're looking for the perfect place for your next vacation, well, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Paul, let's talk a little bit about what BYD demonstrated yesterday. BYD, if you're not familiar with them, it's not bring your own drink, but rather it is the Chinese.
Tucker really liked that one.
I always think
was
when I
good,
see it. But rather, they are the Chinese originally battery manufacturer that now has become an EV manufacturer. And they demonstrated a vehicle yesterday that, using what they call their Super E platform, can basically add 250 miles of range in 5 minutes, which would effectively eliminate all range anxiety if it were true. Now, I'm not saying it's not true, but rather it's unclear what the long-term impact is on the battery, how it impacts, how many charging cycles you can get through doing this, and this is before you even get to the fact that you are talking about basically insanely high levels of power transmission in order to do this, that they've even said themselves, hey, this is probably only going to be available in places near high voltage architecture to begin with because of the sheer power demands of doing this. And so it's not like you're just going to be able to do this anywhere in the country, but certainly a pretty big milestone that they're talking about here.
Certainly would be the case. You do have to take this, like you mentioned, a little bit with a grain of salt. It's sort of, you mentioned being close to a significant power source, and anytime you get an auto announcement like this, it's certainly significant, but it has to really bear fruit in the market to see if this is actually the case. But if it is, it's a total game changer. You're right. I mean, just for basis of comparison, Tesla's most sophisticated charger on the market, I believe we were covering yesterday, is in around 15 minutes to charge up fully. So to be able to cut that down from 15 to 5 is incredibly significant, not to mention the cost of these vehicles is making a significant inroads and dent in Tesla's demand globally. Obviously, in the United States, you can't purchase them, but they're going for less than $30,000. So it remains a significant competitor to Tesla. And as we were covering yesterday, the Chinese, in terms of their exports for auto vehicles, not only in the EV space, which we talk about a lot, but on the gas-powered side of things, their ability to churn out very cheap models, they're making significant inroads in Chile, Brazil, and other countries in terms of their exports of gas-powered vehicles in addition to the EV side.
All right, we're now going to do a little bit of electrical trivia knowledge testing.
Oh, boy.
Paul, can you tell me what a watt is? Specifically, can you tell me what a watt is as it relates to a volt without putting it into your computer right now?
A watt is a unit of power measuring the rate at which energy can be transferred or converted.
Correct. So watts are basically like the flow. Now, it has two components, which are voltage, which is basically like how fast is the how many electrons, how fast is the electricity moving there, and then you've got amps, which is basically the rate of the flow, and then the last one. Do either of you happen to know what an ohm is, or an ohm? I don't even know how to pronounce it. Quite honestly.
I'm just thrilled I got through the watt part of this segment.
Thank
goodness for ChatGPT.
I don't know. It's OHM, but that is the resistance of the wire that you are dealing with there. So, again, when we talk about this and being able to charge these, ultimately, you've got a couple things that you need here. The first is you need high voltage to be able to charge at these speeds, which means if you're just out at your garage, you're not going to be able to get to 1,000-volt charging just because that's an insane amount of power to be running through anything in your home. It's just nuts. You even talk about what your washing machine and dryer do. They're on 240-volt circuits typically. So you're talking about something that's 4x that, and you're like, yeah, probably don't need that in my garage just because of the risk and everything. Yeah. And this is before you even get to, okay, what's the amperage of the wire to be able to actually carry all of that power? And then, from there even, okay, what's being supplied to my house? And is there even enough power? Is there even enough, volume of power basically being supplied to my house to be able to charge at this rate? The answer is no, but you don't need to, because home charging, you say I can do it overnight. But when you're talking about trying to get this out in the wild, hey, you can't just put this at a gas station or a rest stop, because most of them don't have the available infrastructure for this either.
Yeah.
So there's a lot of build out that needs to happen. And this is why, yes, proving that you can do this from a tech perspective is really interesting, but logistically being able to roll it out,
it's a whole other story.
You're not having 5-minute charging all over China in the next 2 years.
Not to mention the cost that would be associated when you're talking about 4 to 5 times the power required for your washer dryer. I can't imagine what a fill-up would be.
The holy grail of battery technology is still, can you get to solid state batteries, lithium air batteries and things like that are much lighter, much denser, and as such, take a lot of that weight out of the EV, but also can charge much more quickly without, having to go to this route. Those are things that become, more interesting. But hey, this is, make no mistake, big milestone, but pump the brakes, pun intended. Let's take a quick break here, and when we come back, we'll do a little bit of stack roulette.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Financial planning is hard enough. That's why having the right advisor on your side is so important. This is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called What Can a Financial Advisor Do for Me? It's available by calling 800-393-4001. The guide discusses a variety of areas where an advisor can help you, from developing a plan that may achieve your financial goals to giving you the peace of mind necessary to handle consistent market volatility. A skilled advisor is much more than a money manager, and we wrote this guide to help you learn about the variety of ways that an advisor can serve you. The economic climate today is challenging to say the least. If you're in need of a financial professional, call us today and get your new free guide called What Can a Financial Advisor Do for Me? That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The Financial Exchange is part of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K is Saturday, November 8th, and registration is now open. The race is sold out in each of the past 4 years, and slots will fill up quickly, so don't delay. Visit dav5k.boston today and reserve your spot, or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston.
Paul, what do you have for me for Roulette of the Stack?
There's some good ones in here, Chuck, but we've got a federal court case here where Netflix paid $55 million for a show, but the prosecutors are saying that the creator blew all of the money. So this is back in 2018 where the streaming boom was probably at its peak, and there was just a ton of money being sloshed around to purchase new shows out there. So there's a show creator out there, Eric Rinch, who had really not done a tremendous amount of content. He had done a movie back in 2013 called 47 Ronin, and he had also put together in 2016 and 2017 some sci-fi series. But ultimately, he was pitching his new series that was going to have Keanu Reeves in it, and asked for...
big Keanu fan.
Yeah, he was asking for some big bucks, and Amazon was initially his agreement, but then Netflix came in at the last minute and gave him $44 million up front to make the series. All sounds well and good. Within 18 months of starting to make the series, he asked for $11 million more. So what he did with this money, Chuck, was he transferred it into his personal accounts, invested half of it into call options on an unnamed biopharma company. He lost all that money there. He spent $2.4 million to buy 5 Rolls Royces, a Ferrari.
What do you need 5 for?
It was 6 total, 5 Rolls Royces and 1 Ferrari. And he put $1.8 million to pay credit card bills. And then he paid another...
How do you run up $1.8 billion in credit card bills?
When you have 55...
What's your credit limit?
I could do that pretty quick. No problem.
He spent... Oh, this is crazy.
This guy is single-handedly distorting the Fed statistics.
This must be the most mind-blowing of all. $638,000 for 2 mattresses. How do you even get 2 mattresses to get up to $638,000?
What do you get for that? What does it do?
It's got to be the biggest bed anyone's ever seen. So, long story short, they're in court fighting that out. No comment from Netflix on this story. He also began acting erratically, as you can imagine, with some of these spending items here. But he also said that he began to have the ability to predict lightning strikes amidst going off the rails here.
Oh.
Interesting.
So there's that.
That's what the mattresses are for. I'm sorry. I just $638,000. That's 1.5 times the median U.S. home for 2 mattresses.
I almost don't know how those mattresses exist. Who's selling them?
You could have 1.5 median houses or 2 mattresses, and you pick 2 mattresses. What do they do?
Who sells those?
Okay, I got to figure out what we're doing here in terms of, okay, most expensive mattresses.
I saw one for like $58,000 or something.
Top tier mattresses like ranging from $20,000 to $1.6 million.
Wow.
Okay, here we go. So if you're looking for the expensive ones, this one is called how do you pronounce the A with the 2 dots over it? Is it Hostins? Hostins? The Grand Vivitas.
Vivitas, 1.6.
It's handcrafted using the finest natural materials such as horsehair, cotton, wool, and flax.
Flax seeds.
Flax, not the seeds, but the actual flax.
Okay.
They give you the seeds, and you can eat those as like a protein supplement.
Mm-hmm.
The manufacturing process involves meticulous attention to detail, with each mattress taking over 320 hours of skilled craftsmanship to create. And ultimately, it's going to be ruined when your cat throws up on it. Like, I don't know. This one here is called the floating bed. It's $1.6 million. It appears to float in midair thanks to a sophisticated magnetic system that keeps it suspended off the ground. So
I hope
basically,
he got to keep the mattresses, this guy.
Can you like disable it if you run like a stronger magnet near it? Like, is that how you wake someone up? Is you just like, I don't know. Anyways, that's kind of disappointing that stuff exists. Let's take a quick break. We'll see you tomorrow after the Fed. We'll have all to recap on tomorrow's show.
If you're